April 2019. It's time for market today. My name is Nina Shaban. It is a day that the economic survey report that has just been released, and that's exactly what our focus is on today. Now, let's get right into it. Kenya's economy grew by 6.3% in 2018, up from 4.9% in 2017. According to the 2019 Economic Survey report, the growth has been attributed to significant improvement in the performance of the agriculture and manufacturing sectors. Kenya's economic growth in 2018 was also supported by the enhanced performance of service-oriented sectors such as tourism, as well as transport and communication. Elsewhere, Kenya could begin shipping out its first batch of crude oil in July. In a statement, Tullow Oil says 80,000 barrels of oil are currently being stored in Mombasa ahead of the export. Says it is seeking to increase production of oil in 2,000 barrels of oil per day, up from the current 600 barrels of oil it produces daily. Tullow Oil further says it is finalizing engineering designs for the oil pipeline that will run from Turkana to Mombasa. The company has further said it is on course to submit the environmental and social impact assessment report of the proposed pipeline project by the second quarter. Still on matters oil, Brent North Sea crude hit a 6-month high above the $75 per barrel Thursday on supply concerns that have been worsened by the United States tightening the screw on sanctions hit Iran. Brent for delivery in June jumped to $75.42 per barrel, the highest level since late October. Oil's other main contract, WTI, reached a 6-month peak at $66.16 per barrel. The U.S. removal this week of waivers that allowed countries to buy from sanctions hit Iran is expected to hit oil supplies through analysts are keeping watch on the region and whether OPEC responds by opening up on the topic. Oil prices had already enjoyed a strong recovery this year, with output capped by Russia and the Organization of Petroleum Exporting Countries. Crude futures have won support additionally on unrest in OPEC members Venezuela and Libya. Oil kingpin Saudi Arabia, meanwhile, on Wednesday said it had no immediate plans to raise oil output to offset the move by Washington. Saudi Energy Minister Khalid Al-Faleh insisted that global oil inventories continued to rise despite unrest in Venezuela and the tougher U.S. action. Iran's Supreme Leader Ayatollah Ali Khamenei on Wednesday called the end of the oil sanction waivers by the United States a hostile measure that won't be left without a response. Around 9 a.m., Brent North Sea crude traded at $75.23 per barrel, up 66 cents from Wednesday's close. WTI gained 21 cents at $66.10 per barrel. Now, the Kenyan shilling held steady against the dollar on Thursday, with inflows from horticulture exports and diaspora remittances helping meet a dollar demand from oil and goods importers. Now, traders told Reuters commercial banks quoted the shilling at 101.45 buying, 101.65 selling per dollar compared to 101.50 buying and 101.70 selling at Wednesday's close. Let's take a look at the indicators. Now, China launched on Thursday a staunch defense of its Belt and Road global infrastructure projects as it opened a summit with a pledge to ease concerns about debt linked to its signature foreign policy. President Xi Jinping's pet project is a reboot of the ancient Silk Road to connect Asia to Europe and Africa through massive investments in maritime, road and rail projects. The initiative offers to bring much-needed modern infrastructure to developing countries, but the United States has dubbed it a vanity project, and critics warn it is a debt trap favoring Chinese companies. Huang Kengning, a member of China's powerful Politburo, said at the opening of the three-day Belt and Road Forum in Beijing that there have been some misunderstandings and unfounded rumors about BRI that they hope to clear up. Now, Japan will fail to hit its 2% inflation target by 2022, the central bank predicted on Thursday, as it also revised down the estimate for growth in the world's third largest economy in its closely watched quarterly report. The Bank of Japan forecast inflation of 1.6% in the fiscal year ending March 2022, meaning its years-long battle to reignite prices is far from won. The board lowered its inflation forecast for the year to March 2021 to 1.3% from 1.4%. Japanese inflation currently stands below 1%, less than halfway to target despite 6 years of aggressive monetary stimulus under board governor Haruhiko Kuroda. The central bank kept its ultra-loose monetary policy in place after a two-day policy board meeting, but added a fresh time frame, saying the extremely low rates would be maintained at least through around spring 2020. It cited global economic uncertainties and the risks of a scheduled hike in consumption tax later this year from 8% to 10%. All right, let's take a look at the agro-commodities and indices. All right, welcome back. You're still watching Markets Today right here on Metropole TV. Remember, you can always join in our conversation, and that's at Metropole TV KE on all social media platforms. That's Facebook, Twitter, and Instagram. I want to very quickly go through the indices and the losers and gainers at the close of today's closing bell. And I'll start off with the indices. The NSE 20 share index that closed at 2,873.63, and that's a gain of 0.28%. The NSE 25 share index that closed at 3,963.03, and that's a downfall of 0.02%. And the all share index closing at 158.89, showing a raise of 0.15%. Now, very quickly, let's take a look at the losers and gainers at the close of today at the NSE, and we have Ngugi Group Limited. We will start off with the gainers. Ngugi Group Limited saw a raise of 9.94%. Olympia Capital Holdings Limited saw a raise of 7.39%. Trans Century Limited saw a raise of 7.14%. Stanbic Holdings Limited had a gain of 3.91%. Sasini Tea and Coffee Limited is a gain of 1.97%. Now, very quickly to bring you up to speed with the losers. Housing Finance Group Limited lost at 7.19%. Uchumi Supermarket Limited saw a loss at 7.14%. It was also in the list yesterday, in the list of losers. Now, Home Africa Limited saw a loss of 5.77%. Samia Africa Limited saw a loss of 5.66%, and the WPP Scan Group Limited saw a loss of 5.28%. Our discussion today shall be around the economic survey, 2019 economic survey from the Kenya National Bureau of Statistics that was released just but a few hours ago. And my guest in studio is going to help us just delve deeper into it, and without wasting any time, we're just going to take a look at the different sectors and how they have been affected. We'll start off with the financial sector. David Ngugi, a very good evening to you. David is an economist and investment analyst. Good evening.
Good evening.
Am I talking too fast? If I'm talking too fast,
No,
please do let me know, yeah?
It's okay.
All right. Now, thank you very much for gracing us with your presence. I want us to start off with the financial sector and its performance. The financial sector was unfortunately not as competitive as all the other sectors, and that's according to the economic survey that has just been released. In fact, when it comes to market capitalization, and I wish we had that graph so that we can make it clear for our viewers, when it comes to market capitalization, the year 2017 did way better than the year 2018. So would you attribute this to the capping rate that the banks, rather the capping rate that was given out by the Central Bank of Kenya?
Okay, in terms of the financial sector, if you look at the numbers for the growth for that particular sector, it actually improved based on 2017, because in 2018 the growth was at around 5.6% compared to 2.8%, which was recorded in 2017. So in terms of the financial sector in the performance, that is in terms of profitability, there was some improvement recorded because in 2017 profitability really dipped, especially in the banking sector, for example, especially for the small tier 3 banks, because that's when the effect of increased regulations in terms of IFRS 9, as well as things such as implementation of the interest rate cap, that was when it was really felt. But coming into 2018, we've seen some improvement in terms of the performance of some various banks, such as maybe KCB, etc. But in terms of the tier 3 banks, the small banks, there has been a decline in performance, and that's why we've been seeing this consolidation of banks such as NBK and now KCB, we saw CBA and NIC. So there's still a problem in terms of performance because, as you mentioned earlier, as compared to the other sectors, it's
not as competitive.
It's not as very competitive. So it's mainly because of that interest rate cap, as well as also increased regulations.
Okay, so is this a situation that we shall be seeing? It's quite stagnant, if I must say. So will we be seeing any change anytime soon from where you sit? Do you think we'll be seeing any change?
Okay, in terms of performance, because like we've mentioned, things that are hindering the improved performance are mainly things such as the interest rate cap. We saw that there have been talks of maybe repealing the interest rate cap by the end of the year, but still, from the regulatory side, from the parliament, we don't see, from where we see it, we don't see any repeal this year, because in as much as the government, they want to repeal that thing, there isn't any change that warrants maybe the repeal. So we don't see any change as much going forward, but banks have started adapting, and they've started trying to improve their profitability by things such as what we call unfunded income, because mainly the main core business of a bank is mainly to take deposit and issue out loans. But now we've seen that banks are trying to diversify and start to increase maybe their profitability through maybe fees and commissions. So with that, and also increased innovation, so we expect probably that's what will maybe be driving growth going forward, and not maybe in terms of lending so much.
Very quickly, let me just ask you, how does this whole situation affect the trading, the shares, the NSA? Okay,
in terms of trading, we find that in terms of the volumes, most stocks that are currently moving the stock exchange in Kenya are the large cap stocks, and the large cap stocks, we find that banks are most of those stocks, because apart from maybe a company like Safaricom and EBL, we'll find that companies such as KCB, Barclays, maybe the financial sector is the large cap stocks are mainly in the financial sector. So with a decline in maybe the performance of the financial sector, that's why we've been seeing also a decline in the performance in the NSE. Because apart from maybe Safaricom, the other ones that are mainly driving the stock market are the banking stocks.
And the shares being stagnated, and there's not much trading going on. All right, so what role would you say the local investors and even the foreign investors have to play in this?
Okay, in terms of the foreign investors, you'll find that, for example, like last year, we had net outflows. So meaning that foreign investors were mainly exiting their positions in the Nairobi Stock Exchange market. So with that, we'll find that in the large cap stocks, especially such as Safaricom, it's main activities from the foreign the foreign market. That is maybe those fund managers from the foreign markets. So with the decline in the performance, maybe for the financial sector, you'll find that because it's historically it's one of the sectors that has been performing really well.
Yeah.
So with the decline in the performance of the financial sector, definitely we'll find that most foreign investors are exiting their positions. So, and in effect, it has been affecting the volumes being traded.
And what needs to be done to change this though?
Okay, what definitely needs to be changed, and most people have been talking about it, for example, the performance of the banking stocks, because the performance of a stock is directly linked to the profitability of the company, because when you invest in a stock, you're basically trying to invest in the future performance or the future expected cash flows from that particular stock.
Okay.
So in the banking stock, definitely talks have been there, the negative effects of the interest rate cap, and that's why that conversation keeps popping up. And to stimulate the profitability, definitely we'll have to seek a way we'll have to look at ways in how we'll maybe remove it, or maybe make some adjustments or some amendments which will in effect lead and improvement in profitability.
And that's something that not only you and I are waiting for, but all players and all sectors are waiting to see how that will play out. Now, I'd like us to look at the economy as a whole, and other sectors such as agriculture and manufacturing and even employment. So first off, let's just look at the GDP. The GDP in 2018 grew to 6.4%, and that's from 4.9% that was in 2017. So would you attribute this to the political calm that came after the handshake?
Okay, definitely that also played a part, because also when you're looking at macroeconomic conditions, political stability is one of the indicators probably we'll have to look at. But if you look at 2017 and to the 2018 performance, we were coming from a really low base in 2017, because we had like 2 elections in 2017, and the first time that cost a lot, and also with the elections and risk of maybe political instability, definitely will find that also the levels of investments definitely declined. Also, there was a decline in agricultural production in 2017, because we had that effect of drought at the end of 2016 and at the start of 2017. So with the increased with the improvement in performance in 2018, it's mainly because we were coming from a relatively low base in 2017 because of all those factors that we mentioned. And in 2018, we saw improved weather conditions, so definitely there was increased agricultural production. If we look at a sector such as manufacturing, if you look at the individual components that have led to an improvement in that sector, they're basically agri-processing. Things such as processing of milk, that is dairy processing. So with the improvement in the agricultural sector, definitely it had the effect trickled down to also the manufacturing sector.
It's a chain.
It's a chain. Definitely it's a chain.
All right, David, I'm sorry to cut you short, but I'd like us to take a very quick break, and we shall be back with more on the economic survey.